Gold is shining. It has already broken new records in the world of currencies. This year, in terms of the US dollar, the price of an ounce of gold tested the $2,075 level 3 times. In the past 3 years, it hasn't been able to surpass this level. Will it break this $2,075 level? When will it happen? We'll try to answer this question and more in this video. Let's get started with the market and current affairs review. You know, when I started this channel, I explained why I like to have gold in portfolio baskets to some extent, but during the fluctuations of gold, we occasionally reduce or increase the amount in the basket, sometimes adding silver, sometimes increasing platinum, and so on. Why? Because the direction the world is heading, the problems America can't solve, the problems it will create, and the wrong fiscal policy in the transition to a multipolar world, we shouldn't waste time choosing other currencies. We told that having some refuge in the world's oldest currency will have a long-term protective effect on portfolio baskets. In this direction, the market is evolving, giving levels and periodic movements. We also provide short-term trade levels and explain suitable atmospheres for long-term physical quantities. For example, you remember, while China was on vacation 2 weeks ago, when they pushed the gold ounce down to $1,800, we said not to miss this great opportunity. It moved more than 10% from there, closing above $2,000 on Friday. You see, we've been talking for months that this would happen even if a war hadn't broken out. Some dear followers asked me, "Are you Nostradamus or a fortune teller?" And others call me a doom prophet, or mention conspiracy theories. Friends, I'm none of these. I'm truly an analyst who reads history a lot, tries to analyze developments, and has been trading almost all products in these markets for years, trying to understand how products move, what they move based on, and how macro scenarios vary. So, when you look at all these things, there's actually a very clear picture in front of you. But some people who don't want to see this picture sometimes try to deceive you with short-term fluctuations for their personal interests. These products are protection elements in your basket. I remind you once again. On the other hand, we've been telling for months that Eastern central banks are persistently emptying American bonds and buying gold instead, that they're buying physical gold. And you see in the chart that since the fourth quarter of 2014, that is, in the last 9 years, the sale of major American bonds worldwide has reached $444 billion, and the increase in gold positions is $816 billion. This chart is so clear. We've been telling you for months. They're selling American bonds and replacing them with gold. You can say they changed the situation. The situation changed after we said it. So, I think I deserve a little respect on this subject because I insist on it. Because I also received some negative reactions about the interest in gold and silver. Friends, these are protective elements in your basket. Let me remind you once again. On the other hand, Eastern central banks insist that they are buying gold, and not American bonds. We see that the sale of major American bonds has reached $444 billion and the increase in gold positions is $816 billion. You see, this is the clearest evidence. We have been telling for months that long-term trend. Thus, we're trying to explain how important it is to take refuge in gold and silver, especially against the risk of the single reserve currency, which has become vulnerable in the face of wrong fiscal and monetary policies and under the changing circumstances, and how long-term protection will be achieved in portfolio baskets. We keep telling you the latest developments and what's happening in this direction in our videos. For example, we've been talking for months about how interest rates will continue to rise, and how wrong the statement, "Nothing will happen to gold," is. Brokerage firms that wrote reports on $1,500, $1,600, $1,700 have now changed their estimates, as you can see on the screen, and they now have estimates ranging from $2,050 to $2,500 for 2024. All brokerage firms and international institutions have started to give estimates about gold. None of them were at these levels, and they all revised their views. Some will say, "Conditions have changed. We told you beforehand that conditions would change." So, a little more respect for me in this regard. I think I've earned it, because I insist on this. We've been insisting for months that the world's leadership is now under threat, and that in the face of this risk, the oldest currency in the world, gold and silver, is a refuge. We can see that central banks of major countries worldwide are behaving in this direction. In the same table, we see that the sale of American bonds has reached $444 billion and the increase in gold positions is $816 billion. Again, in this table, we are looking at the products that have had the highest returns in the last year. In the last year, of course, orange juice, which we have talked about on this channel in the past, sugar, and cocoa have had the highest returns. But gold and silver are also among the top in the last year. Despite all the pessimism, despite all the beating, they are at the top. I believe that this positive contribution will increase further in the coming weeks, and I think it will go up in the list. On the other hand, the most important table this week is actually a table showing the percentage of how many of the largest companies in America have higher interest payments in their cash flows. The table is divided into S&P 500, the largest 1,000, the largest 2,000, the top 3,000, and so on. You can observe the gradual increase in these percentages, especially in the largest 3,000 companies marked in green. As we move outward from the largest companies, we can see that their expenses and interest payments have reached a significant percentage in their cash flows. This means that these companies might be heading towards bankruptcy. Even the largest companies, while relatively more comfortable, will also face difficulties. As we move further out to the overall economy, the general economy of the United States, we see that the high interest rate environment is the real problem. I've been trying to explain this. There was no possibility that the consequences of raising interest rates quickly would not happen. So, it was a problem when they kept the interest rates low for a long time. When they did this, they could try to temporarily suppress inflation, and they might succeed, but it would lead to bankruptcies and systemic problems. It has already begun to happen. These are the pictures we saw in advance, so don't forget this table. We will soon see how the high interest rate environment will create major problems for companies throughout the United States. Moreover, I came across an important report that caught my attention, prepared by Pam Martins and Russ Martins on October 24, 2023. In this research report, they mentioned the possibility of a $20 trillion run on the systemic banking system based on a financial stability report released by the Fed. You know, if there's a bank run, meaning a rush to withdraw deposits from the banking system, it's a problem. Such a movement began this year in March. Then, the banking system was supported, and banking shares have been taking a beating. I analyze all of them, but I can't find anything to recommend, as I still see them as so low that they can't be sold. I see them falling further. So, there is a significant problem in the United States system, and bank runs could become a major issue both in the US and in the global banking system. We will closely monitor the banking problem. Furthermore, I noticed a report about silver, especially with regard to the surge in demand for silver in 2021 and 2022. This surge has led to a supply shortage. According to data published by the Silver Institute, there is a deficit of 7,393 tons when comparing the supply and demand for silver. In fact, there's an interesting situation here. If you add up 2021 and 2022, it's the first time in the last 11 years that silver is in deficit. It used to be in surplus, and there was pressure, and prices were lower. However, particularly in the last 2 years, it has started to fall into deficit. Therefore, it seems like it's just a matter of time before silver faces a significant supply shortage. I suggest we keep a close eye on this. As for gold, it is shining. It has already broken new records in terms of all the money sciences on Earth this year. In dollar terms, gold has tested the $2,075 level 3 times this year. Can it surpass this $2,075 level, and if so, when will it happen? These are the questions I will attempt to answer in this video. Let's start looking at the gold charts. In the short-term view, there has been a strong breakout in gold. You can see that it might correct from here and come back due to overbought conditions. If you put aside the talks of how interest rates will go up and how this and that will happen, which are actually incorrect, we have always emphasized that the long-term trend in gold has always been upward. So let's move past that. Net, as long as gold remains above $1,952 technically, the direction is upward. This week, there is a Federal Reserve meeting. During Fed meetings or such important data weeks, you know that there would be selling in gold throughout the week, and then they would close those shorts after the data. But this time, there may not be such pressure as there isn't any expectation of a rate hike from the Fed. Because every time, there was this notion that the Fed would raise rates or speak hawkishly, but now the markets are so pessimistic that there isn't much room for extremely hawkish comments. Therefore, it is a bit weak for gold to see such pressure leading up to this meeting. However, if it does happen, as long as it doesn't go below $1,952, the direction is clearly upward, and the journey towards historical highs has begun. In such situations, sometimes, instead of waiting for corrections from here and there, the movement can accelerate. I don't think gold will give too many opportunities this time. I believe it will continue with a strong trend upwards, and I expect the historical record above $2,075 in dollar terms to come before the end of this year. So, we are observing this slight correction in the record movement. There might be some consolidations, flags, or pennants in the daily charts, indicating brief rests for a week or two. But I believe the major movement has started, and the movement will continue upwards from here, as long as it remains above our $1,952 trend following level. My view hasn't changed much on the monthly chart, where gold is at $1,933. As long as the weekly movement stays above $2,535, $2,750, and $3,600 remain my medium-term targets. My medium-term target at $2,535 is expected to be reached in the first quarter or first half of 2024. It might even surpass that. We will closely monitor it. There is a possibility of a break in the film somewhere, so as long as the buying continues, gold, you see, is a very big market. However, due to the long-standing pressure of paper gold, there are a lot of short positions. As physical demand increases, the dynamics might shift to a different dimension. There is always a possibility. Even these targets I've given might fall short. But let's proceed step by step. I continue to increase my position in my portfolio. Therefore, gold is an ongoing product for me. Now, let's turn our attention to the silver ounce. Silver has been relatively weak, but movement has started there as well. We closed above the critical 200-day moving average at $23.04, which is significant. However, $22.70 is more important. As long as silver remains above $22.70, we can say that the upward movement in silver has started. $24.40 is also important, given the descending channel there. After that, the real focus is on $25.40, where a significant consolidation has been going on for 3 years. There are inverse head and shoulders, flags, and many pennants at that level. If $25.40 is broken, all of these patterns will come into play, and gradual movements towards the targets I've provided will begin. We've been writing about these targets for a long time, but we've also been saying that they won't go until the movement starts. The clarity here is that if $25.40 is breached, these movements will commence. Until then, there's a possibility that silver might perform less than gold. But I can say we are getting closer to that point. Why am I saying this? It's because of the gold-silver ratio. The gold-silver ratio indicates the primary direction is downwards in the long term. However, there has been pressure there for a long time. You might say, of course, gold should be more valuable. Silver is more of an industrial metal. But look, these types of movements typically start with gold going up first and surpassing silver, especially during times of war risks and similar events. However, without a long-term silver movement, there cannot be a substantial gold movement. Silver lags behind initially but later catches up, and in large movements, it often performs better. Without silver's participation, significant gold trends are rare. In my opinion, if the gold-silver ratio doesn't break lower and we don't see substantial movements, the current gold movement may seem temporary. But the current view is not like that. You can see that the movement in gold is technically and macroeconomically sound. Regarding the gold-silver ratio, I believe that when gold breaks above $2,075, there will be more significant movements in this ratio, probably favoring silver. After breaking that level, we can expect substantial demand for silver, especially as people may find it harder to afford gold due to income disparities. Poorer segments of the global population will likely show more interest in silver. I tracked the gold-silver ratio at various levels, such as 85, 84, and 78. As of the closing on Friday, the ratio stood at 86.84. If the ratio breaks lower, it suggests an increasing trend towards silver. Until the ratio breaks, silver may remain relatively calm. but I sense that we are approaching a significant movement, especially considering the recent consolidation in the short term. Platinum, known as the king of precious metals in the past, used to be more valuable than gold. I wanted to talk about it again this week because I have been holding some platinum in my portfolio. We've seen a close just around $906 in the platinum price. If we see consistent daily and weekly closes above $906, it will be the first signal of a movement toward my medium to long-term targets. I continue to hold a portion of my position in platinum for the medium to long term, and I'm closely monitoring it. I have some question marks, particularly related to electric vehicles, as a lot of issues have already started to emerge. But my real belief is in hydrogen fuel cell cars, and I believe they will become more prominent around 2025 to 2030. In that field, platinum will be used as a catalyst. I also anticipate that platinum will still have industrial applications, and its quality, which has historically been higher than gold, should see a revival. However, it has been trading below gold for the past 7 to 8 years, mainly due to Russia being a major producer. I think there will be a resurgence in platinum, and we'll continue to monitor it. The movement in wheat is still not getting underway, but there are some divergences and good signs there, I have continued to add positions there slowly. I'm holding my medium-term portfolio, and as long as it stays above the $562 trend following level, I can say that the medium-term wheat movement is starting or has started. We are hovering around those levels, and there might be a good bottom formation, but we will confirm that a movement has started once there's more activity. For now, it seems like there is a consolidation phase. More consolidation might occur below $562, but I can say that the primary direction is upward as long as it remains above $562. I reviewed cocoa again this week because it gave another signal to the upside. It had not participated in the 2021 rally for a long time, but later it joined with a strong move. You see, in commodity trading, it often happens that it remains dormant for a while and then suddenly surges. It was trapped in a horizontal triangle for 5 years, and then it broke upwards. Now, it continues its move targeting $5,200, and we've already gone above $3,800, with $3,734 being the trend following level. As long as it remains above that level, the upward movement continues. I checked to see if it's forming any consolidation around there, but it has actually strengthened and made a new peak this week. So, the outlook suggests that the uptrend is continuing. Brent crude oil had been in a tight range, watching. In the bigger picture, downward pressures on the demand side have been suppressing it, while efforts to squeeze it upward have been coming from the supply side and factors like geopolitical tensions. Currently, there are 2 ongoing conflicts affecting this situation. That's why I am not taking a long-term position in Brent crude oil or energy companies. However, you can trade the short term with the prices on the screen. As long as it stays above $89.65, you can consider the main direction to be upwards. Below that, you can look at the negative side. If the bottom formation confirms as a pattern and there's some momentum above, I see the possibility of a move towards $104 or even $108. But if it breaks below, especially below $88.50 and $85.45, it could evolve into a much more negative scenario due to the troubles on the demand side. So, Brent crude oil is not for the long term, but for short-term traders, it's a product to watch closely, keeping an eye on the levels I've provided. There was significant pressure on natural gas, as I've explained. We talked about it, and it broke to the upside, making a new high of the recent period at $4.06. It has a medium-term target, although it hasn't reached there yet. However, along the way, there was a strong uptrend last Friday, followed by a slight pullback to $3.28. As long as our trend-following level at $3.28 remains valid for the spot price, I expect at least some movement up to $4.06, considering the broad base here. Beyond that, it gets a bit complicated because natural gas is a highly manipulative product. It can skyrocket or plummet in an instant. Russia is a significant producer, Iran is also a major producer, but the product traded on this screen is influenced by the east coast of the United States. It's heavily affected by meteorological conditions. If a storm is coming, prices soar. If the weather is forecast to warm up, prices drop. Natural gas is highly manipulative, so be cautious. It's wise to take some profits with your medium-term positions, secure a portion of your profits, and continue with the rest. If it reaches $4.06, you can consider reducing your position there, as it might go much higher if circumstances turn. However, don't carry risky positions. Commodity trading works that way. It can exhaust you for a long time, but once a trend starts, it can keep going. Our trend following level is $3.28. Regarding uranium, as you know, it was one of the best performing trades this year. It surged upward. Right now, it's coming down near the $45 trend following level, but it's also forming a consolidation pattern towards the upside. I still believe the main movement is upward, with medium-term targets such as $60, $70, and $77.77 in mind. We should closely monitor the consolidation at these levels. Pullbacks can offer buying opportunities, but you shouldn't overload. If there are daily closes above $45, and weekly movements suggest more upside, you can consider adding to your position. Uranium tends to linger for a long time and then suddenly make significant moves. We trade this product through the uranium ETF, which is linked to the raw material of nuclear energy. As for American 10-year Treasury bonds, there is a divergence. We discussed the double top last week, and selling pressure emerged from that point. If we look at 4.82, you should closely watch that level. If daily closes come slightly below that, we will keep an eye on the 4.53 level, where there might be a pullback. However, if it falls below 4.70 on a weekly basis, correcting the divergence, and then goes back above 4.70, it would likely just be a correction. Because on the weekly chart, there is no correction signal yet, and the main trend is still upward. So, if it closes the week above 4.70, the primary trend of rising interest rates will continue. However, if there's an influx into bonds, particularly due to market disruptions as I mentioned in the Barclays Bank report recently, there's a possibility that interest rates may take a breather. In this scenario, while keeping an eye on the levels I provided, the overall trend will remain upward. Euro-dollar, I will quickly recover it. My trend following level is at 1.07. As long as it doesn't push above that level, the trend will continue downward. But if it goes above 1.07, we may see a different scenario regarding the dollar. For now, I see the downward pressure continuing. As for dollar-yen, it appears bearish to me. As long as it stays below 150.41, the direction for the dollar-yen will be downward. However, the charts are conflicting. The monthly chart looks good, the weekly one seems problematic, and the daily chart is getting closer to a selling point, but it hasn't given a clear sell signal yet. So, I will trade it downward as long as it remains below 150.41, especially considering the possibility of moving towards new highs. Be cautious and don't trade without stop-loss orders as the dollar-yen pair can experience significant, two-sided movements, especially this week. I've covered a wide range of products, including various currencies, in this report for you. I will continue to shed light on your path in these challenging times. Wishing you all very careful, profitable, and fantastic days ahead.